Hello, folks. The markets might be a little scary today. Hey, Brian, let's roll that logo. Hello, folks. Bill and Brian here with Energy Rogue. Today, we're going to talk a little bit about WTI. We might even mention some nat gas. So, Brian, let's talk about some news first. What do we got in the news?
well, listen, what we're going to talk about today is we're going to talk about outlooks for 2024 on WTI. But first things first, I'm a Houston Astros fan, and I'm feeling a little down, a little miserable
I tell
today.
people you go to the dictionary, you look up the word optimist, and it says Astros fan.
I felt that in 1986 when
Yes,
the
exactly.
Mets stole our soul,
And I
and
also tell people that's how you tell an Astro fan because they'll talk about the game in 1986.
yes, it kind of stole the soul. So let's see. For the Rangers, I'm super happy for you Rangers fans, and listen, I'm excited to see if they can take it. I mean, this will be big. So
And by the way, I'm really not all that happy for you.
you're not?
No, not for the Ranger fans.
Oh, you're not? Okay. Well, let's talk. Here's what we're going to talk about. We're going to talk about the outlook for WTI for 2024. There's a lot of variables that we want to track and we want to keep in view, so that when we're looking at where we are in 2023, we're now in fourth quarter 2023, looking at 2024. But let's talk a little bit about news. We're going to touch on natural gas, and then we're going to get into WTI and the outlook, because there's a lot of things happening on the supply side, geopolitics side, and demand side that you should know. And we're going to try and target this about 30 minutes, but we are open for comments. We will get back to your comments. So send them over, because we will see them and we will address them live. So let's first talk a little bit about some of the supply side. U.S. is likely to tighten sanctions on Iran. This is on the heels of the U.S. loosening some of their friction with Venezuela, and that has moved the markets a little bit. We'll talk about price levels in just a little bit, but what's your viewpoint on Iran crude oil sanctions, Bill?
They've been working so well so far. In case you didn't catch it, that was a little bit of
Sarcasm?
yeah, pretty much sarcasm.
Yeah.
I don't think it's going to make that big a difference. I mean, there's no teeth behind it. They're going to sell their crude oil when they need to. If they sell it $10 below market, people will buy it.
Here's the picture of their production profile since 2016. And as you can see, there was the steep drop in 2018, but since 2021, they have been increasing, and some of this has been hitting the market. So I see news stories like this, and it really inflates the importance, I think. But again, we take a look at the fundamental basis, and what's been happening is that they have been increasing their supply. They're almost up to 3 million barrels a day, and their max output was 3.8. So we're not talking about a massive shift from where they were in 2020, which was at 1.9. We're not talking about a 2 million barrel a day shift. And if they tighten the sanctions, it's still going to hit the market.
Right.
That's what I think. Now,
Right.
let's flip sides, because just a week ago there was discussion of Venezuela and loosening some of the
Right.
Restrictions. I don't even know what the restrictions were
What
about.
they've done is they pulled the license of U.S. companies to go to Venezuela and work.
Is that what they did?
Yeah. And so
Okay.
what they're doing here is talking about giving them license to go back to Venezuela and work. That's supposing that the companies actually want to go. And two, that they get there and can actually do anything with what they were working with before, which I'm going to say is very highly unlikely. And three, whether Venezuela wants them.
Yep.
So,
But one of the important things, and we'll get into this with the fundamental side of the equation, a lot of this fall is not going to pop back up. Iran has a few critical spots that they can bring their production on very quickly. Venezuela needs to get in and be re-stimulated. There are discussions that some of the re-stimulation is going to be in new areas. I don't see this as being impactful, but again, we'll cover that when we get.
so Brian, what you're saying is that maybe our government might be talking their own book.
Yes.
It's coming from inside the house.
The call is coming from inside the house. Yes, we're going to have some Halloween humor. We're not going to be doing another live stream until after Halloween. So, I mean, just always.
Because I've seen enough horror movies to know any weirdo wearing a mask is never friendly.
It's never.
Exactly.
So, on the fundamental side of the equation, China draws on crude oil stockpiles while boosting refining. So what's interesting about this is there's been some speculation of China actually drawing down their crude stockpiles, but increasing their refined product stockpiles. So there's a lot of expectations around this. We're going to talk about crude oil after, but we wanted to reference these articles because Venezuela, Iran, and China, these are all three critical variables when we're talking about WTI for 2024.
And China's been up in their game on refining because that's what they need. They don't like importing the refined products. So they've been building refiners.
And so what we're going to do from here, we are going to touch on natural gas, and then we're going to get back to WTI for the remainder of the year as well as 2024. But Mike has a question. Do we have any insight on derivative market for natural gas into the end of the year and into the winter? Who is on which side of the trade? That's actually a great question, Mike. And we did a live cast on weather last week. We do offer, as part of our services, a weekly outlook, and we provide insight as far as what we're seeing on the potential for that. And this week, what we were calling for is kind of a bounce up to around $3. But as any forecaster, sometimes you're going to be right, sometimes you're going to be wrong. But we're hovering right at the $3 level. It really gets back to, Mike, fundamentals. And the fundamentals, we have a bias of as we get into winter, there is going to be less production showing up. And when less production is showing up, it will depend on weather. A lot is going to depend on the weather demand. Last winter was very light. I think my end of year projection is for December contract is trading about 335 right now. My end of year projection is over $4. If you want to find out more, there's information down below. You can find out a little bit more about us, or better yet, join us on Rogue Edge. It's $89 a month. You get a weekly report. You get access to our Discord channel where we talk about the market and what might happen on any particular day. You get access to interactive charts that can be shared with this image. So there's just so much here. We have a community. You have all the fundamental for supply, demand, imports, exports for natural gas, crude oil, NGLs, refined products. What am I missing, Bill? I'm missing electricity.
Electricity, I was going to say.
Asset maps. Yep. So it's $89 a month, and this is a platform that the institutional traders utilize this same information to make their decisions. So there's information down below. And Mike, if you want to book a meeting and learn a little bit more, that's where you can do. We're going to stay focused on WTI, but I think I stated my end of year was north of 4. I think, Bill, you're hovering just below 4.
$3.99.
3.99. Okay. So so that's our viewpoint on natural gas. Let's get to crude oil.
So, Brian, what was your first job in the industry?
My first job in the industry was trading natural gas on a trading platform, or not on that platform. It was brokering trades between all the industry participants.
So, how smart were you?
Not very. Not very. And some would
Brian,
argue I'm still not there.
So, folks, that's where I met Brian's when he had that job, and listened to one of his calls and thought, "Oh crap, this guy's talking to my customers." And so, Brian and I began our adventure into the industry pricing and what makes things happen during that time. But the point being is that the one thing Brian never was afraid of was asking questions. So don't be scared to ask us questions. You can't ask us a dumb question. We might give you a dumb answer,
Right.
but you can't ask a dumb question. And so, with that said, we want to point out that we are not certified financial advisors. We don't do any of this to help you do your 401k plan or anything. We have decades in the industry trying to figure this stuff out ourselves. And we've created a library of information that allows us to be able to make observations of the market. And so, and sometimes the observations are extremely detailed and highly technical. And there's sometimes an observation I made this week. I filled up my Jeep here in Oklahoma for $2.97 for unleaded. That means crude oil's weak. So sometimes the observations aren't quite as technical, but every one of them is still an observation, and every one of them has validity at a certain point. All we try to do is bring all of that stuff together, all of our experience together, and give you a little insight into what we're seeing and the reasons why, which is something you don't find anywhere else, are the reasons why. So, Brian, let's talk about WTI.
Yep, let's talk about WTI, because along those lines, continuing to ask questions, and that's part of the reason we do focus on our Discord and interaction with our customers, because everybody's asking insight on any particular day. So all our charts are interactive so that you can determine what is important, what timelines are important, what levels are important. And like this chart, for example, is US production. And what we do is we put it in a 5-year band of max and minimum. And as you can see, we are setting new 5-year highs because our production is over 13 million barrels a day. Now, we have an opinion that we are about to start to see a massive decline, and it's because of rigs. Rigs have been dropping precipitously since May. So if you look at that, we are headed towards a production decline, because when you drop rigs, you're reducing the amount of new production. And what I want to show you here, and we've touched on this before, but a lot of people don't realize at 13 million barrels a day, we're declining close to 650,000 barrels a day every single month. And when we do that, it means we have to replace 650,000 barrels a day with new production. That new production has been declining ever since 2022. It started in April, and it's going to start accelerating. So we're going to start to see declines on the U.S. production. But when we take a look, let's take a look at some storage and stocks real quick, because that just came out this morning, and this is there's a 1.3 million barrel build on commercial crude. Distillate had a draw. Let me go over to distillate, refined products, fundamentals, and let's take a look at gasoline and distillates for just a second. Gasoline inventories are pretty healthy, and distillate stocks are down. And one of the key demand elements is going to be the distillate diesel. And you can't, Bill, tell us, if I want more diesel, what happens?
If you want more diesel, you have to make more gasoline. You cannot divide a barrel in the refinery. When you refine a barrel of oil, you get both diesel and gasoline. So depending on the demand of both of those products, you get other products as well, but those are two major products you get.
Yep.
And so if you want diesel, you're going to have to produce gasoline. So that's going to drive the price of gasoline down. It's going to increase the inventory. And because in the U.S., we don't export gasoline. We actually export diesel and import gasoline. And so it's because in Europe, they need more diesel. And so they have the same problem with their refiners as we do with ours, is that when they make diesel, they have to do something with the gasoline. So they've been shipping it to the U.S. So that's that's how that balance works. And so if we're using more diesel, not the same amount of gasoline, we're going to have a gasoline build in the inventory stocks.
Well, and actually what you just said is represented in the diesel versus regular spread, because what you can see is back in 2022, when commodity prices were rising up precipitously, diesel demand was very, very strong. So we were setting new 5-year highs, and you can take a look right here. We are headed back that way. It's because diesel is short right now. Gasoline is pretty healthy, so we're going to see a widening of that spread for anybody that is interested in that. But let's talk a little bit about the U.S. and the U.S. Because of this new production decline. This is what we're expecting to continue. And as you can see, let me resize this. You can see we were continuing to add new production last year, and we have now entered into declines. And so as we're talking, if you have a comment and you have a question, drop it in there. We will reference it on reference it on the live stream. If you're watching this and it's not live, you can find information about us down below. But what you can see is the shale regions have already started to decline. And that's because of reduced productivity from the wells that we're drilling, reduced rigs, and that's only going to start accelerating. So we're going to start to see more and more production fall off. Thus far, we haven't, let me switch back over to this. Thus far, we have not seen the production tip over, but that's coming. That's going to be coming in the next few weeks. So that's
folks, it's
our
important.
opinion. Oh, go ahead.
It's important to understand that on the data we're showing you here is monthly data, and you'll get some of the other stuff from the eye. It's on a weekly data.
Well, this one's weekly.
Okay.
This production is weekly, but the rigs is going to be monthly data.
Right. So you got to be able to understand. That you're looking at both the same things. So we saw some production increase in the last, what was it, the week before last or this last week? And a lot of that has to do with the fact that some gas pipelines opened up additional capacity, and therefore they were able to move more crude oil out of the Permian because they could move the gas. Now, it created a gas price for a couple of days. And so, but it allowed more production to come on. Now, I realize that's production that's already been drilled. It was just sitting there waiting for the infrastructure to meet up. They weren't flaring it. They were just because they've got a lot of rules around flaring right now. So that's why you'll see some inconsistencies in that in a week time span versus a month time span.
Right. Right. And on the weekly data, it's representing an uptick. On the monthly data from the drilling productivity report, it's already showing that we're in decline. So those two will reconcile over time because there's kind of a smoothing that happens.
Right.
But I think when we're talking about WTI for 2024, let's take a look at where crude oil price is right now. We're at 84.41. Let's take a look at the futures contracts because this is going to be what we're going to be discussing. For 2024, as of last night's close, crude oil price for WTI was just under $80. And if we're taking a look at the monthly distribution, it's a straight line down, and we're ending up at 76.80. And what I believe, due to this profile right here, this net production change, and the fact that we've been shedding rigs all year, I probably won't change my opinion on this. I think we're going to see north of 100. So we're talking about a $30 move or a 40% move from where we're at 75. So, or 76. So I think we're going to be north of there. What is important in the price determination? Production and demand. Okay. Those two things are going to be critical. Demand, as we're talking about China, India, let's take a look at what OPEC has in store for demand. In the fourth quarter, they believe that 103 million barrels a day are going to be consumed in the globe. Now, bear in mind, we started the year around 101. So that number is pretty aggressive. EIA has different timelines. In 2022, we were just under 100 million barrels a day, but they're projecting for 2025 that the world consumption would be 103.2. But I want to make reference to this. In 2030, 105.5. 2035, 108.5. They're expecting us to continue as a globe increasing our demand on crude oil.
Right.
That's a little bit different than what you hear in the headlines, and I think it's an important distinction. Do you have any thoughts on that, Bill? Because in the first quarter, OPEC is calling for roughly a 500,000 barrel a day increase of global demand.
Well, you sort of look at what they say and what they do. While they're calling for a 500,000 barrel a day increase in demand, they're only allowing for a 200,000 barrel a day increase in their caps. And so I think what they're trying to do is
what do you mean there?
Well, they've been showing that they've restricted by 1 million, right?
Right.
Well, in 2024, they get to come back up, and so in the first, I think it's the first quarter, it might just be the first month, but first quarter, they've allowed those caps from where they are at in December to go up by 200,000 barrels a day.
Okay. Okay.
So I think that they might be talking their book a little bit, but I think we need to understand we can't look at this demand from a domestic point of view from the U.S. because there's a lot of countries out there whose demand is going to continue to grow that we have no say over.
Right.
And so I think what's going to be interesting to me is I'm going to be watching that WTI Brent spread and see what begins to happen in there. Because there's a correlation there that I think the WTI could be less because it's being met by crude oil coming from other parts of the globe.
Right.
We're not the only ones. We may be the largest one, but we're not the only ones who create crude oil.
Well, I mean, you can, well, when you're talking about demand and you're talking about production, there's quite a bit of production that is here in the United States, but a lot internationally as well. And when you're looking at the demand, yeah, the Americas represent roughly 25% of that demand stack. And that's roughly where we fit as far as that demand. And that, but on the production side, think about this. The Americas represent 28 million of supply. So we need to look at demand and supply in the Americas. And what I was just about to pull up is the variables that I look at for 2024 are US supply, are Venezuela, Saudi Arabia, Russia, and the global demand. Those are the factors. And that's part of the reason that we created this platform and made it accessible to everybody at $89 a month. But let's talk about them one by one. Let's talk about those. I'm going to include Iran in this, so I'm adding a variable. Iran sanctions, we touched on it. If they have a maximum output, it's maybe 500,000 barrels a day of added supply. Okay.
Right. Mm-hmm.
So that's, I don't see that really happening if we're tightening sanctions. Let's hop down, not Qatar. Where's Venezuela? There it is.
I just think Venezuela is going to be a non-issue.
Here's the thing. We've had some of our members reach out and ask us on Discord, and for those that want to be involved in that, any member of Rogue Edge has access to our Discord. We answer questions. We talk about what's important to you. But the fact of the matter is that I think at best case in 6 months, we would see maybe 100,000 barrels a day. Best case. I think that would be best case.
That would probably be the best low.
You made a face. What? Talk to me.
I don't think they're going to be able to go in there and actually increase the production much
because they have to stimulate. They have to re-enter.
Well, it's just a lot of work. First of all, it's just a lot of work. Second of all, it's a lot of work with the government that doesn't want to really help you.
Plus, at an economic incentive, we're having a harder time in the United States allocating more capital. There's a reason that we have dropped so many rigs, and we're dropping those rigs at 80, 90. I mean, we're dropping that rigs when we're in a price band of $80 to $90. So, I mean, we're not going to see a massive production shift. And at $80 or $90, is it really going to change this curve? Not by much. So Venezuela, I don't see as a big variable. Iran, I don't see as a big variable. The one variable that I'm watching real closely are two variables, Saudi Arabia and Russia. And now Saudi Arabia, they follow what they said. They said that they were going to cut 1 million barrels a day. And at the time they were about 10.6 and they're now down to 9.1. They need the price to match their budget to increase because they have a budget deficit, and they have a budget deficit at I think 90 or 95 Brent. So they need this price to go up. I expect their supply cuts to continue to the first quarter, but be aware we have a 2024 election. We have a Israel-Hamas conflict in Gaza. We have Russia, Ukraine. We have so much happening, and there are rumors that Iran was going to what is it called? They were going to
close the Straits of Hormuz.
Yeah,
they won't do that. The rest of the Arabs will be all over them. So that I mean, they could cause some damage and slow it down. They could sink a ship because it's really, 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 really tight area where all the Middle East oil comes out of.
Well, roughly 25% of the global crude goes in and out that region. So
it comes right through the Straits of Hormuz.
Yep.
And Iran, their border is on the water there, so it's not like it's a hard thing for them to do. But I think they would put themselves as a pariah among the Arab states if they do something like that. And so they have tried it before, and it didn't work so well for them, and they could very well try it again.
Right. And
And
so,
so I think that's the real wild card. The real wild card to me is if Iran gets involved in some of the things that are going on globally, whether it's the backing of Hamas or anything of that escalates with Iran, I think all bets are off on the price.
yep, yep. And that's part of the reason that I think,
And by the way, that's up and down. So
yeah. But I do watch Saudi Arabia because if they have a motive, listen, they increased their production significantly, and that hurt Russia. And it's back a little bit before this 2016 period, but they hurt Russia. There was a back in 2014, and that really, they opened up the valves, and that actually impacted the U.S. markets. So I'm watching Saudi Arabia because that's important, and they could reverse. But even if they do reverse, it adds maybe 1.5 million barrels a day at the best.
I think Russia is going to get their oil out. It's just a matter of what price.
Well, but here's where you get into some interesting information gaps. And I say information gaps because not there's not clear line of sight on what Russia is doing because of the production and where where it goes. Obviously, when they entered Ukraine, there was a big production response, right? You can see that right here. And when you, or no, that was COVID, but you can see that right there. So let's take a look at everything. We went from 10 million barrels a day, went down to 9. Now, there was speculation at the time that Russia was not going to be able to keep their product flow because of permafrost, but they did solicit some help because most of the Western companies exited Russia. A lot of people expected this to collapse. It did not collapse. They were able to stimulate and actually increased above their pre-war levels. So, so one of the things that I think is I'm actually interested in this decline. Now there's a lag between reporting. So this is May. Ever since the war, they're several months behind on the reporting. This is the wild card that I'm looking at, and that along with I'm monitoring Saudi Arabia. So my closing thoughts: the variables to look at for WTI are going to be demand, which is going to be impacted by economy, and there's I would say if we're trading $85 and we have a Russia-Ukraine war, a conflict or war, I'm not sure what the correct terminology, Israel and Hamas, we have those two that are happening at the same time, and we're at $85. This tells me that the entire financial market expects us to have very weak financial footing. So, but from a pure inflationary expectation, I expect us to exit the year in the 90s, probably in the mid 90s, and I expect us to firmly be above 100, possibly as high as 120 next year. But as Bill said, we're not financial advisors. Always do your research, and
Right.
that's part of the reason that we put together this platform so that you can do your research and understand the elements that are important. Because if your business is energy, you need to understand this stuff, and you either need to spend hours and hours and hours finding information and bringing it in, or what we like to say, spend $89. You have an interactive chart that you can get into, and we cover everything from supply, demand, imports, exports, for natural gas, crude oil, NGLs, refined products, and
Electricity.
electricity.
Sparking.
So So that's what I have. Any closing thoughts there, Bill?
Well, I think it's just important to realize that there's going to be some interesting volatility around some of the things that are going on right now. And I think it's important if you're trading, volatility is your friend. If you're a producer, volatility is not so much your friend. So you have to sort of hedge on the high side. And so we can be able to help you with that and help you spot the spot, so to speak. And just reach out to us, give us a shout out, and we will do what we can to help you. And at least go out, subscribe to Rogue Edge, and begin to look at data instead of looking at headlines.
Yep. And listen, if you like this, please like, comment, share. That stuff really helps. And really, if you want to come support us, join Rogue Edge. It's $89 a month. And with that, you get an expectation on what's going to happen the week. You get access to our Discord channel, so you get real-time insight. As a matter of fact, we covered and discussed Permian Highway yesterday. What was happening with Houston Ship Channel the week before? What's happening in a different region in the Appalachia? We interact with all our customers, and for $89 a month, that's a pretty cheap investment. So if your business is impacted by commodity prices, our platform can help you because our community on Discord helps each other. And we hope you join. We hope you like. We hope you subscribe. And always make sure
You let him drown. You never paid any attention.
Yes, exactly.
Just pay attention, folks. So listen, thanks so much. Drop us a like, drop us a comment. If you comment, we will get back to you. And there is information down below if you want to reach out to us directly, book a meeting, or anything like that. So I think that's it.
I think that's it. I think it's time to roll the logo.
All right. See you, folks. We'll see you next week. And because it's Halloween, don't forget.
Because I've seen enough horror movies to know any weirdo wearing a mask is never friendly.
So have a good
See you,
week,
folks.
folks.